Can you keep up with the pace of market regulatory reform? MarketsReformWiki.com, the place to keep up.
When approaching marketing material, a CTA really needs to consider the type of information that it wants to convey and the audience that it wants to convey it to. If the information is going to a wider audience, a less sophisticated audience, there may be a requirement for the CTA to make more disclosure, a more detailed presentation, whereas if it's a smaller, more targeted, more sophisticated audience, the disclosure might not be as detailed, maybe more general. Promotional material cannot be misleading. It must be balanced in its discussion of profit and loss. Any opinions need to be clearly identified as such. They have to have a reasonable basis in fact. Statements of fact must be factually accurate, and the CTA must be able to support those facts. If performance data is included in promotional material, that performance data must include a disclaimer, a past performance disclaimer, as well as may require other risk disclosure statements. The inconsistency of information with the CTA's disclosure document. So a common area where we find these issues is in the past performance presentation. So I'll give you an example. A CTA might choose to highlight a particular rate of return for a month or even a year, and while that presentation might be appropriate or might be acceptable, the issue that comes to mind is whether or not that rate of return is consistent with the CTA's overall performance of their program that they're offering. So if in fact it isn't, then the CTA would be required to add additional information about the program as a whole. Sometimes this could be mitigated by the CTA including drawdown information relevant to the entire program that would serve to balance out the presentation. Another area with respect to performance is when a CTA is showing their performance in comparison to an industry benchmark or a ranking, a CTA ranking. And what we'll typically see is a graph or a bar chart. And while the presentation might be acceptable, a lot of times the discussion that goes along with those charts isn't complete or does not describe why it's being shown and what the comparison is really about. Another area that we do make issue with is the issue of balance. This happens a lot in lengthier pieces where a CTA has a newsletter that's several pages, or a website for that matter, and spends quite a bit of time talking about its program and the benefits of investing with the CTA and the potential profitability that a customer can expect, and then does not really concentrate too much on discussion of risk of loss and whether or not there is a potential for loss. The only disclaimer is at the bottom of the newsletter, at the end of the newsletter, in the form of a standard disclaimer, which in some cases may be appropriate if it's a one-page ad or if it's an email. That would probably be adequate, but in a lengthier piece, we like to see the discussion of risk of loss to be dispersed within the narrative of the piece so that it isn't just a footnote at the bottom and that it's actually being discussed. It really is a matter of showing a complete picture to the reader, so that if you are providing examples of where the CTA has profited or has potential to profit, that you also talk about the downside risk, that there could be risk, there's a possibility for risk, or if you're providing examples, you're providing examples of also of unprofitable trading that occurred. You're not just highlighting the good times and not the bad. A CTA can really, in general terms, can talk about its firm, its personnel, its the services it provides, its trading program, and it could also provide a general commentary about the markets and what's going on in the markets at that given point in time. The issue is there's certain information that, once included, would trigger additional reporting requirements on behalf of the CTA, namely the inclusion of a trade recommendation or of past performance. That typically will trigger requirement for the piece to be submitted to NFA for pre-review. And this is in the case of a television or radio advertisement, or a webcast or a webinar that would require submission prior to use. The CTA should consider what type of information that would best be suited to certain types of social media. For example, if a CTA wanted to tweet its rate of return for the most recent month to its followers, it could do that. However, it need to take into consideration that any performance would need to be accompanied by a past performance disclaimer, which obviously would have to be taken into account in the 140 character limit that exists. So therefore, maybe tweeting that information might not be as appropriate as maybe posting it on a Facebook page, or maybe emailing it, or posting it on a website. So I think the CTA needs to consider what medium best suits the information that they want to convey. Announcing a new program or discussing an upcoming seminar may be more appropriate to tweet as opposed to a rate of return. One thing that we offer our members is a pre-review program, whereas it's a voluntary program that you could submit your promotion material to NFA and we will review it within 14 days and provide comment. Another resource we have is a guide that will help you, assist you in preparing your promotion material. It also provides insight into NFA's review program. We have a number of educational webinars on our website, one specifically that deals with social media. We are always available at NFA to answer any questions that a member may have when preparing a specific piece, a specific question. We'd be happy to answer.